And I do have a hard stop at 12:15. Just
Okay,
heads up. Sorry, we have half an hour, so hopefully we'll be okay.
We will. Yeah. So we're going to shoot for 20 minutes.
Oh, perfect. So we'll be totally good. All right.
Okay. All right. All right. Well, I want to welcome today, not just an average person, a goddess, and not just an average goddess, a tax goddess. Shauna is a CPA. She's got a master's in taxation, certified tax coach, certified tax strategist. And she is the US top 1% ranked, highly sought after tax strategist. And she's passionate about helping successful business owners, entrepreneurs, and high wage earners reduce their tax burden. Having founded Tax Goddess Business Services at PC in 2004, she has built a large global team of tax specialists who use plain language. Oh my goodness, God bless you. Plain language to help her clients create tax opportunities and manage risk legally. Oh my goodness, Shauna, I'm so excited to have you here. Welcome.
I love being out in the world and spreading knowledge and tax love. So I'm excited for today.
Well, good. So we were talking in the green room and we were talking about the difference between somebody who does your taxes and a tax strategist. I think you use different words. And so that's how inept I am. What are the right words and what does it mean?
Absolutely. Well, I think this comes from a lot of people believe that their tax preparer, their CPA, their accountant, whoever's preparing the tax return, that person is actually bringing strategies for the preparation of your tax return. However, if you wait until you go to file your tax return to implement strategies, the year is already over, right? The year was over December 31st. So a tax strategist comes in before the end of the year and helps you work on tax strategies to minimize legally, of course, minimize your taxation so that when you bring your files to your tax preparer, CPA, accountant, whoever's preparing, when you bring your files to that person, your overall tax liability has significantly reduced. So when you look at a financial team that a business owner should have, you're generally looking at a bookkeeper who handles your day-to-day, your tax strategist who helps you implement strategies during the middle of the year, right, as you're progressing through the year, and then, of course, your tax CPA who's filing the final tax return with the IRS. So,
got it. And so the something else you said again in the green room, you said your CPA keeps you out of jail. The tax strategist helps you find the line to where you go into, helps you find where the line is.
You got it. Well, and so we coined this the aggression scale. Okay. So if we're thinking about this, tax strategies come on a scale between 0 and 10. 0 meaning the IRS will never call you, never ever, except for random audit, because of course that can happen. And 10 means that you're all going to jail. Okay. So most of us, right, I'm a redhead, and red and orange do not go well together, right? So I'm not going to jail. Nobody's going to jail, right? So normally a tax strategist will sit at about a 7 or 8. And so when we ask you as an entrepreneur, well, where do you want to be? Because it's your tax return, right? You're the one signing the bottom of that line. Some people, most entrepreneurs, are a little more risk friendly, right? So most entrepreneurs will say 7 to 8. But some will say 0 to 2 or 3 or a 4 or whatever that is, right? So when you look at, bookkeepers are generally 0 to 2. Most good CPAs, if you ask them that question, where do they sit on the scale? Most good CPAs are going to say 4 to 5. Give me the proof, show me the backup for the strategy you want to take. But most entrepreneurs sit at a 7 or an 8. Right? I want all the strategies, don't want to go to jail, and I want to have all the backup, but I want to take every legal strategy that I can, right? The laws are written for a reason. I want to use them. Mm-hmm. So you really have to figure out and build your team based around the aggression level of you as an owner, right? Who are you and what is your family goal when you look to build this team? So,
Okay, team.
team.
Let's talk about team. What are we talking about?
Absolutely. So let me come at it this way. For most of us, when we start our business, now my business right now is we're going to turn 19 years old in 12 days from today, from the day of audio here. We're going to turn 19 years old. When we very first start, all of us, when we very first start our company, you are the cook, the cleaner, the bottle washer, right? You do all the things, right? And when it comes to finances, that means you're probably doing your own books, paying your own bills, potentially filing your own tax return with TurboTax, which is like stab to the heart. Stop doing that, okay? But for many of us, we just don't have the money yet when we first start. So you do everything. As your business grows and as it changes, you start adding people that have specialties, right? You add an administrative assistant to help you with some of the admin tasks. You add an actual cook in your restaurant, so you're not behind the griddle, right? So you start adding these specialists. The specialists, when you're looking at a financial team, the specialists that you want to have on your team are the bookkeeper, the tax strategist, and of course the CPA. And generally, there'll also be a financial advisor. So somebody looking at, we have extra money, how are we going to invest it? How are we going to grow it? Somebody to bounce financial ideas off of. So when I say team, that is in my mind the perfect combination on the finance side. And of course, as you get bigger, if you're a 1,000-person company, you'll have your own internal accounting team, CFOs, controllers, that kind of thing.
So a lot of small businesses will have either a fractional CFO or a full-time CFO, even without 1,000 employees. Where do they fit on the team?
Absolutely. Definitely part of that. Now, the CFO, so if we look at those different roles, the bookkeeper and the CFO, in my opinion, are kind of more on the day-to-day transaction side, right? So bookkeeper's doing the day-to-day, CFO is maybe looking at your stuff monthly or quarterly saying, okay, here are big picture directional changes we need to make, or we should go focus on this new acquisition, whatever it is, whatever the goals are. When you look at taxes, that tends to be then the tax preparer and the tax strategist. Those two things go together. Tax strategist working throughout the year, tax CPA generally filing at the end, maybe a mid-year meeting, like a 6-month meeting. And then, of course, you've got the financial advisor who kind of sits out and outside of the operations of the company. The financial advisor would be looking at bigger picture stuff, typically more long-term. So 6 months, a year, 5 years, 10 years, that kind of thing. So.
Okay. Now, let's say you have somebody who says, you know what, I optimized my tax strategy 5 years ago. I'm good. Why do I need to do anything else? What's happened that would make that a bad statement?
I'm smiling and doing air quotes. I'm good. 5 years ago is actually really key. There was a major change in the tax law on December 31st, 2017. So 5 years ago, depending on when you're listening to this, right? 5 years ago is a big change. If you did your tax plan before that change, it was 60% of the tax code changed. 60. So if you wrote your tax plan before that deadline, you're in deep trouble. Now, even if you wrote it after, let's say you wrote a tax plan last year, okay? One of my favorite bits about what I do as a tax strategist, okay? The IRS sends out an update 3 times a day, every day, Monday through Friday, 3 times a day. And that is on top of the typically weekly updates from the state, plus all the updates at the state and local level, right? So the cities, the localities, this kind of thing, okay? So you've got 2 big factors here. One, laws change 3 times a day, right? So unless you had the plan written 2 hours ago, it's already changed, right? So that's the first one. Secondly, not everybody on your financial team understands all of the same knowledge. This is why you have a team. So your CPA, who is great and has never gotten you audited and you've worked with them for 20 years, fantastic at filing forms. However, do you think really, when it's April 15th and they are green eye shade on and face down in that paperwork, do you really think that they read the 3 updates from the IRS that day or the next week when they're on vacation, or right? Different professionals have different roles. It is the job of a tax strategist to make sure that we know every update, every rule, every change 3 times a day from the IRS, right? So
Yeah.
5 years ago, you're a little out of date at this point.
Yeah. So what would you say, just kind of let's throw out a nugget for the listener here. What is a tax deduction or a tax strategy that most small business owners should be taking advantage of, but are not?
Oh, okay. Well, it's so funny because you mentioned the green room, right? Now, can I give 3? I'll talk fast, but can I give 3?
Yeah.
Okay. So the first one, because we were covering it in the green room, is the master's exemption. Now, sometimes it's called the Augusta rule. Okay. So if you have a separate entity from yourself, an LLC, an S corp, a partnership, some sort of separate. So sorry, I'm getting all worked up here about talking tax code. If you have a separate entity from yourself, so LLC, partnership, S corp, C corp, your business can actually rent your primary residence or secondary residence or boat or cabin or whatever it is. It can rent that space from you and pay you rent for that space. Those rents are 100% tax-free if you do less than 14 days a year. So,
okay. And that's actually a question I have.
Love it.
Up to 14, or does that mean 13?
14.
Including
14. Yeah, so under 15.
Okay.
Yeah, 14 good. Yeah, 14 days, right? So I should be clear, it's not 14 events. You can't have a week-long event 14 times, right?
Yeah.
It's 14 days specifically. And I think what a lot of people, we've been seeing this a ton right now on TikTok and YouTube and, all the social medias, Facebook, use this particular thing. I think what a lot of people miss is doing the research on what your fair market value of that rent actually is. Because I'll give you a very good example. We've got some clients living in Texas, their rental rate per day market, they've checked the fair market value. They've called some hotels, they've called some conference centers, they got the rates, right? They figured out near them, not in a big city, if they're in a little city, these kinds of things. But the smallest rate I've ever seen is about $500 per event. The largest rate I've ever seen is $18,600 per event. And that was in Manhattan. Okay.
Wow.
So if you're looking at 18,000, I'm going to run that number, 18,600 times 14 events, the person in Manhattan just took a business expense, 100% tax-free business expense for $260,000 of cash that business owner got to just pull out of their bank and put into their personal bank, and they don't have to report it. Magic.
Boom.
Boom. So that's the first one. I promised 3. Second one is paying your kids. Okay. If you have children that are, or grandchildren, this works with grandkids too. If you have family lineal descendants that are at least 7 years of age, right now, 2023, this number changes every single year, you can pay them up to $20,350, so 20350 per child, and none of that money is taxable. Okay.
Oh my goodness.
Right. So one of my favorite stories, I've got a client with 11 children. She has 7 of them that are currently older than the age of 7. So this year, 2,350 times 7, she took $142,000 of money out of the business, right? Put it in the family budget. Now, the only thing, and this is what trips people up here, as parents, you're not allowed to use that money. You have to pay the kids the money, right? It's now the kids' money, okay? As parents, you're not allowed to use that money for food, clothing, or shelter. So you cannot charge your kids rent to get the cash back, okay? But what else are cute little children expensive with? Summer camp, a new iPad, a car insurance, cell phone. There's all these private school, okay? There's all these other expenses that little ones cost the family. Those items are not food, clothing, and shelter, which means your child can pay for their own private school instead of you taking it out of your pocket and having it be non-deductible.
Wow. Wow.
Love it. And then the third one. Do you want the third one?
I do.
You do? Okay. I don't know if y'all heard it a little earlier. One of my dogs, I have 4 dogs. One of my dogs woofed He barked in the background of the audio, so my apologies, but it's a perfect example for this. Did you know that you can write off your dogs as security? And there's some very specific rules, of course, like everything else in the tax code, very specific rules. So the dog at its shoulder has to be taller than the height of your knee. Okay, so bigger breeds, German Shepherds, Rottweilers, Dobermans, Great Danes, bigger dogs, Huskies, right? Is the dog trained? Which the IRS has left that word very vague. So sit, stay, come is trained. We're good. And thirdly, most importantly, does your dog either come with you to work, or do you have people in your home? Remember, master's exemption, Augusta rule, you're going to have business meetings and stuff at your home, right? Maybe you're calling clients, you're doing a mastermind, whatever it is. Is your dog around when there's clients or vendors or somebody else coming into your home if you have a home office? That makes the dog security. Those three things. And if qualified, that means you get to write off grooming and nails and vet appointments and food and toys, all the things, right?
Right. The sad news for me is if we look at the Venn diagram, I love dogs. My wife loves dachshunds. So, so we will never qualify for that exemption.
We need to give him some stilts.
There we go. There we go.
Yeah. Oh, well, this is a good reason to say, you got your dachshund. I want a German Shepherd. Like, this is how we make it work.
Well, our dachshund passed away last year, but she was providing protection, because if there was a snake out there, she would jump right in the way of the snake, get bitten. That dog got bitten 4 times by copperheads.
Oh my goodness. Oh my God. I'm so glad she lived to protect you 3 other times. Copperheads are scary.
Yeah. Well, and then one night I was out walking her and a coyote snatched her. So she didn't protect me against coyote. I had to go rescue her from the coyote.
Of course. Yeah. Oh my goodness. Oh, well, you see, you just need a German Shepherd. I'm telling you, no coyote's going to beat up on a German Shepherd. Problem solved.
Fair enough. All right. So let's go to the salacious. Give me the most salacious tax strategy or tax story that you have.
The best one, and I can't claim that this is mine. Wait, I have two. One was a positive outcome. One was a no-no. Okay, so let's go with the positive outcome first. This one is actually a court case. So the IRS has 3 words to allow you to deduct something. Okay, those 3 words are ordinary, necessary, and reasonable. Okay, so, and it's completely dependent on your industry. So in your industry, for what you do to make money, is whatever you're trying to deduct ordinary, necessary, and reasonable. Okay, so the court case basically reads: we have a professional dancer, and you know what I mean when I say professional? Yeah. Yes. Okay. So we have a professional dancer, and she went surgically, cosmetically, and got some assets enhanced, bigger assets. Okay.
Right.
She deducted them because ordinary, necessary, and reasonable for her to make more money, right? The new assets helped her make more money. Okay. So she deducted them. The IRS said no. They actually had to go to a court of appeals. And the appeals judge said, listen, IRS, did you or did you not collect more money because she had bigger assets? And the IRS said, well, yeah. And so the appeals judge said, well, so she's following your rules, overturned. So professional dancers, appearance, cosmetic, whatever it is, ordinary, necessary, and reasonable, key factors. Okay.
Wow. I would love to hear the second one, but I know we're getting tight on time.
Yeah. Oh, I'm so sorry. I love
No. This is fascinating. I love it. I can't tell you how much I want to hear the other one. But one of the things, again, this is Leaders and Legacies podcast, and a couple questions that we like to ask is how you're showing leadership, how you're developing leaders in your company. My big story is, I was actually just about 2 years ago, I unexpectedly went into a 6-week coma, and my employees ran the company without me. And yeah, it was just amazing. So what are you doing to develop leaders in your life? And that's the first question. And the second one I want to work in is, what is a white knuckled moment where your leadership was kind of put to the test, where you had to make some tough decisions, had to show some bold leadership, and you weren't sure how it was going to work out?
Absolutely. Absolutely. All right. So Tax Goddess, my company, Tax Goddess Business Services, at the moment, we have about 90 people, 90 on staff. And what we've built is in my mind, a proper organization structure. So you have me as an owner. We have a team that we call the core ops. These are the people making the big decisions, right? And then we have our department heads that manage over their staff, right? So we have a tax department and a bookkeeping department and marketing department, different departments, right? So about 2 years ago is when we moved into having a proper departmental kind of structure. And for a lot of our leaders, that was new to them. They'd always been leaders in their department. They've always spoken up and tried to help and try to build and create and make things better, leadership type qualities. But there was never any formalized leadership or leadership training or anything like that. So we set up a formalized structure, and it took a good year for my leaders. We call them HODs, heads of departments. It took about a year for my HODs to really kind of get into their role and learn what they were supposed to do, and really start to pick up, and there's still so much to learn, but start to pick up those management type qualities and management type things. So for example, you can't just go to somebody and say, your work sucks, right? How do you coach? How do you train? Do you want to keep that person? Are they worth keeping, or should you be looking to hire somebody new? These are a lot of the decisions and types of training that for most people, they don't have. They never get this opportunity. And now that my HODs are trained, I would call them 100%, but we're getting there. We're a lot better than we were 2 years ago, right? Now that they're trained, we are starting to push that knowledge down into the teams, right? To start to create seniors above juniors, right? To really start to raise every single person in the entire company through what we call them growth paths, right? Where do you want to be? Do you want to be the management growth path? So at some point in the future, you will become department head, or do you want to go the technical senior growth path where you are the knowledge of whatever that department is, and really looking at those different structures. So it's been fascinating and lovely from my perspective to see the growth and change in my people. And that leads me to the bare knuckle moment, which is at one point we had one of our department heads who didn't like, this was way early on in this process, didn't like the process, didn't like the structures, didn't like the rules and regulations that, when you build structures, there's rules that come along with those kinds of things. Didn't like those things. And in the background was accessing data that they were not supposed to access, and we're having private conversations that they were not supposed to have, and these kinds of things. And so it was a very scary moment for me and for the rest of our department heads, because we knew that we had to get rid of this one particular person. And what we didn't know was there were a good 10 people maybe under this one person, and they are key. They still are key to our organization. Were they all just going to leave, or were they going to stay, or what was going to happen? And that was a very white knuckle moment. I remember. And I speak a lot, I talk a lot for a redhead. I'm constantly chatting. But I remember preparing for the day when I was going to go speak to those 10 people and say, which way are you going? Here's what happened, and here's how I see it. And we were lucky. Every single one of those 10 people stayed with Tax Goddess and are still with us today. So white knuckle, but we made it through. So good stuff. So.
Wow, congratulations. And this is a question I ask all of my guests, and everyone talks about how they did that bold thing and it worked out. And obviously doesn't work out all the time, but I think it's not as big of the risk as people think.
I think we scare ourselves a lot. You know, you kind of get in your head and versus just rip off the Band-Aid and then fix what you got to fix if there's anything to fix. I'm with you 100%.
Yeah.
Yeah.
Well, I know I could talk to you for the rest of the afternoon, but I know you have I know you have somewhere to be. And this has been an amazing conversation. I appreciate your time so much.
Oh, thank you for having me. This is so much fun.
Now you have a book coming out, The 6% Life.
I do. I'm so excited. So the pre-sale just ended. Unfortunately, you guys missed the pre-sale, but this will be live on Amazon on August 21st. And we'd love the help if you want to buy on August 21st. So the 6% Life, our clients have an average tax rate of 6.92%.
Oh.
So yeah. That's what I love about what we do. So this book goes into 7 legal tax loopholes that most people just don't even know exist, right? Their CPAs never brought them up. They were never trained on them. They were never seen it on TikTok or whatever. This goes into the top 7 loopholes that people just don't know exist that are legal for business owners and for entrepreneurs. And as a part of the book, we have created a tax coaching group called the 6% Life group. So if you are finding that your CPA is not bringing you tax strategies, but you love your CPA, you've been working with them forever and you don't want to leave them, you are more than welcome to come join our 6% Life tax coaching group so that you can learn strategies to bring back to your CPA. So
that sounds great. And how did people reach you?
Easiest, taxgoddess.com. Super easy to find. So
easy to find, easy to remember.
Oh.
Shauna, thank you. What a delightful conversation.
Thank you so much for having me. It's been such a pleasure.